Growing a small investing account can be incredibly hard to do, particularly due to the fact that you don't have much capital available in order to get a position of leverage. So I'm going to share with you today a few tips on how to grow your trading account easily. How's it going, guys? Ryan here, and today I'm going to share with you a few tips on how to grow a small trading account. This can be something that is quite a struggle, particularly due to the fact that a lot of new investors start off with smaller sized accounts, and due to the fact that you don't have much leverage due to having a small amount of capital in the account can make it extremely tough, in particular when you take into consideration things like brokerage fees. But before we get into that, guys, please remember to like this video. It helps me out so much, and keep subscribed for more content. And if you've got any comments, questions, queries, or any other tips for people trying to grow small trading accounts, leave them down in the comments section below. And with that, guys, let's get straight into it. So what is my first tip for growing a small trading account? Well, the first one comes from personal experience, and I found it extremely hard to do your traditional sit and wait investing when it came to having to invest in a company, due to the fact that, as I said before, I didn't have much capital invested and not much leverage, so those longer term returns were particularly hard to obtain. So what I looked for were catalysts. I looked to exploit new or improved opportunities on the stock market. And effectively what you're looking for is announcements or announcements upcoming that are going to cause a spike in the share price. And what this will enable you to do is gain on a lot larger percentage basis. So for instance, if you have a small account and you're only getting 1 or 2% profits, you might struggle due to the fact that brokerage fees cut into your profits quite heavily. To avoid this, obviously you need to increase your percentage gains, and the main way to do that is through capitalizing on these various catalysts, because you are getting typically those 10, 20, 30, even higher percentage gains, which means a higher profit margin, and as a result, those brokerage fees aren't eating into your profits every single time. And that is probably one of the quickest methods in order to start growing your trading account. You just don't want to get caught in those sort of pump and dump traps whilst you're doing so. Now, the second is to be agile. Don't take such a large position that you're not able to exit. While it might look appetizing to go into a share, for instance, that's under 1 cent, because you can accumulate a large amount of shares, and each pip that it increases means you might be able to make $500, $1,000, whatever that amount might be. Don't fall into the trap of not being able to basically not exit the stock, because at the end of the day, if there's no liquidity in that stock, then there's no point trading it. You want to be looking at probably over a few dollars worth of stock. So for instance, if you're looking at a stock that is worth $5, it can go up 50 cents, for instance, that's 10%. But you've got all those small percentage pips in between yet where you can enter and exit. And if you are going to potentially, unfortunately, make a loss and have to cut that loss, you can set it so that you're not losing a lot of money. So instead of losing $500 in one hit, you might only lose $50. And it comes down to, once again, that idea behind leverage and liquidity. Being able to accumulate a large amount of stocks is great only when the stocks are going up and you have the ability to exit. That is fundamental. You need to have the ability to exit those stocks in an agile manner. Otherwise, you're going to get caught in those pump and dumps and other situations where you're going to have to exit significantly lower than the price you entered in. And that moves into the next section where I'm talking about stop losses. Setting those stop losses is absolutely critical, because you don't want to blow up your account in one go. As we've mentioned, you don't have much capital there. So as a result, you need to preserve it as much as possible. It's one thing to make a great profit, but it's another thing to be able to preserve those profits. And one of the best ways to do this is through setting those stop losses. So my recommendation for people who are trying to grow a smaller investment account is to set the stop loss at roughly 5 to 10%. That way you're not losing a massive amount of money should the stock fluctuate, but it also still gives you a bit of breathing room. So if the stock drops 1 or 2%, for instance, then the stock's not going to automatically sell all your shares and you're going to then witness a massive spike and you've missed out on a run. When it's dropping to that 5 to 10% mark, that's when you actually want to think about, okay, is this stock going to go up, or is this the point where I need to exit? And putting that stop loss in place effectively means you don't have to make that decision. It makes it for you. You're out. There's no emotion involved and you can't get caught in a 20, 30, 40, 50% loss type scenario. So set those stop losses in place. And along with that, set the exit prices when you're in the profit. Do not be greedy. And while it's great to see more and more green every day on your portfolio, those numbers increasing, don't get greedy. Make sure you are very disciplined in the amount of profit that you are taking. If you're up 50% on a stock, that's fantastic. Take the money. At the end of the day, we're growing a small trading account here. We're not trying to go for those longer term investments where you might see bigger gains, but it's going to take a longer period of time. This moves into my final tip, which is scalping, and that comes back down to the methodology of taking those profits. Scalping's effectively also known as pip trading, and what you're doing is basically just buying a share and then it goes up a few pips and then you're selling the share. That's scalping. You're going into a stock which has an announcement that's come out, a catalyst of some form, and the prices spike sharply. You enter while it's going up and then you exit before it's hit the top. You're just in there for a very, very short period of time, and as the I suppose the term scalping symbolizes, you're skimming off the top. You just want a small portion of that run and a small profit. And if you can consistently do this, these gains build up over time. And the beauty of this is typically when you're doing it, you're not having to buy into a huge position. So you're not going to get caught in that stock and you're not going to potentially lose a lot. You've always got the potential, but you're not going to lose a lot of money if this stock reverses in the other direction. Combining all these tips together will allow you to get off to a better start when you're trying to grow your trading or investing account in the short term. And I would tend to focus on those catalyst type opportunities and those more shorter term trades in order to start building the account up over time. And then eventually you can start looking medium to long term and looking for those larger percentage gains, because that's when you're going to be able to get the real benefit out of it. You're going to be able to put $10,000 into a stock, for instance, and it goes up 50% and you're making $5,000. That's awesome stuff. But if you've only got $1,000 in a stock and it goes up 50%, that's $500, but you might have waited a year for it to do that. And what's the point at the end of the day? Effectively, you want to grow your account on a trading basis as opposed to a longer term investing type basis. And with that, guys, I'm wrapping up today's video. If you liked it, please remember to hit that like button. I really appreciate it. It helps me out so much. And keep subscribed for more content, guys. And remember to hit that bell so you're notified anytime a new video does pop out. And if you've got any other tips or recommendations for people trying to grow their smaller trading accounts, leave it down in the comments section below. We're trying to really establish a community of people educating each other and helping each other out on trading techniques, investing techniques, all those sort of great things that help people become a lot more financially savvy and stable on the stock market. And with that, guys, I hope you have an awesome day. See you next time. Cheers.